Nir, how are you doing?
I'm fine, Amri. How are you doing?
I'm good. I've been following you for a while. You've been a superstar on LinkedIn. You've been also. So what I love about you is that you're very expressive in the way you kind of communicate, and also I love what you did with Monday before you went into VC. And it's not usually such a traditional route, starting in sales and then going into VC. How did that happen?
First, I like what I've done, or like the fact that I was in Monday in this time. It was amazing, a big privilege, and yeah, it's an unconventional transition, particularly in Israel. I think I'm a little bit unconventional person, so I like to do massive changes. Up until 7 or 8 years ago, I haven't done sales at all. So I'm trying to challenge myself out of the comfort zone and try out new things.
When you start feeling that it's too comfortable, you move out, right? You branch out.
Probably, but I think it's more on the fact that I try not to let the actual comfort be too big of a parameter in taking decisions.
What did you do before Monday, before you went into sales?
So before Monday, I worked for another Israeli unicorn named Sisense. I started there in a more technical role as head of sales engineering. So I've led the pre-sale group, and during that time, I've transitioned into sales. Prior to that, more technical roles around data.
Before we talk about Greenfield, I want us to talk about what you did with Monday because I think that what you're currently doing in Greenfield, really that value creation side has a lot to do with the playbooks that you learned in Monday. So you came in Monday as VP sales, and what was the ARR when you got in?
So I joined when the company was more or less around $50 million, a bit more in ARR. And 4.5 years after, by the time I left, we were around 800 million.
Wow, that's a crazy amount. What were the playbooks that you guys utilized over there to make that jump?
So there were so many, but I think if I had to first like outline in the main guideline that really led us while we were building the sales group was around really building a machine, really mechanizing it. It may sound a bit awkward, but we chased less after the next 100,000 or $1 million of next contract, and it was mainly about building the framework, building the rhythm, building the rate. So every end of the year, when I was about to try and deliver my quota, and I knowing that next year my quota is gonna most probably triple. I was more around am I at the right run rate? Am I at the right hiring pace? Am I at the right pipeline creation pace and so on towards next year? It concerned me not less than closing the current year.
So instead of like chasing one specific client or going in on one specific contract, you were worried more about the process, right? This is very interesting because a lot of sales team. So I think there's like, and maybe you can correct me, but there's like two main mechanisms of like how you view sales. Some sales teams are like more outcome driven. So it's like we need to get $3 million in ARR this Q. Okay, we're gonna do whatever we can. They hustle hard. They do all that stuff, and they basically like there is no process. It's basically based on emotion, on intuition, and just getting those contracts. And then the other sales approach is like more like input, more of like input based. Yeah, like this is our framework. This is what we're going to do. We're not going to chase every single client. We have a framework. We're going to optimize on that framework. And this infrastructure will lead us eventually to get those big clients.
Look, don't get me wrong. I'm really working hard on chasing every contract and working hard on winning contract. But I don't think this would bring you, a long way, running long and scale. Take Monday for an instance. The company just published, I think, 2 weeks ago that they've surpassed $1 billion in ARR.
Right.
The company is growing at a rate of more than 30% year over year. That
Wow.
means the company, if they want to continue this pace next year, need to land probably net $350 million dollars next year. Gross, probably take 1.5 out of it or something like that. Landing a contract, large contract, $5 million, would it move the needle on those numbers? Most probably not. If you don't have a system to hire, to open new markets, to lend, in order to lend $400-500 million in sales, you need to generate triple than that and more in pipeline. How are you going to generate $1.5 billion in pipeline if you don't have the mechanisms? How are you going to hire people? And so on. So, and this mathematics works also on lower numbers. On very small scale, you can do what you've mentioned as like an outcome, what I would call manual. You can hire, if your group is small enough, you can hire very good sales reps. You maybe can have not the perfect onboarding. Maybe some of them have Rolodex, so they can bring their own clients for a while, and so on. It would work, and it would generate the numbers. But at some point, you would choke. I don't know if you would choke at $20 million in ARR, at 70, maybe at 120, but it would happen, and then you would slow down significantly and hit the wall. In order not to have it and run long distance, you really need to mechanize it.
Wow, that is exceptional, because especially now when we're seeing so many. So when you look at Monday at a whole, Monday is like the classic SaaS, right? It's a classic productivity SaaS tool machine. And right now, I think like in the last 2 years, we've seen an incredible amount of SaaS startups in this productivity space. Even in this specific like workspace space, and and with lots of like fancy AI features and protocols and stuff like that, and you see that they're not able to really sell it as a SaaS. You're not able to scale it, and in a VC-backed business, that's what you have to do in order to justify the investment, and unless you want to run it as like this bootstrap kind of private company. But what do you think made Monday specifically that? Is that only based? Obviously, the product is good, but do you think that it has to do with how the leadership viewed this product from the start, in terms of like knowing, like, listen, we have to take Monday and build it into a unicorn? I think like when I look at the market right now, I do see like other startups who are like trying to play the same playbook, like ClickUp, for example. I think they knew from from very early days that they need this to be a very huge company to justify the investments. What do you think made Monday different?
So I think a few aspects. First, I wouldn't consider Monday as a productivity tool, although this is one of the ways we market ourselves. I think what made Monday successful and what companies are actually using Monday for is, if you look at the main processes in every department or for every role, for the key processes in each department, you probably have like a go-to system of records. For the sales, it might be CRM. For the support, it may be systems like Zendesk, and for finance, maybe the ERP. But for the other processes, for the long tail of the processes, process 4, 5, 6, and 8, processes like how do salespeople collaborate with legal people on the contracts and so on, there are no systems. And this was, it had a huge white space, a void that was filled by Excel, emails, chats, and so on. And this is where Monday fed in with a very flexible tool that allows different departments within organizations to fill in those blanks. So this was apparently a very big need. I think that's one parameter. Second parameter, the product is really strong. And the reason why it became that way is that Monday insisted, and this is Eran and Roy, the founders, they've insisted not to have salespeople for the first 6 years of the company. Maybe too long, but what it created is a perfect product market fit. You don't have anyone to explain your prospects or your leads what the product is doing. If it's not, really compelling, easy to use, and so on, it wouldn't convert to paying. On top of that, they've created a huge marketing machine, a very efficient marketing machine to land in those leads. So when you start as a sales rep and you have a very strong product that people like, and you have a strong marketing machine behind you, that's really a big force that pushes behind you with all the systems that we've developed in-house to make that efficient marketing and so on. And lastly, the culture. Like one of the most inspiring things for me, when you entered Monday's offices up until probably the IPO or so, there was a big dashboard on one of a huge TV screen that Roiman have sketched. And this was first year, 50 million. In ARR, I don't know, 100,000 users. Second year, 120 million in dollars in ARR. Third year, 350, 500, 1 billion. We hit those targets.
Wow.
It was like, it looked imaginary when I looked at it. You look at what we've done and the timeline, it's almost like it was almost like guessing in advance on how we would project, but the company really moved that fast and aimed high, allowed people taking decision, making mistakes. Only the main idea is to continuously run and deliver fast.
Amazing. So you guys would walk into the office building every day and would see those targets, those big KPIs, and everybody would be incentivized to go after those specific numbers.
The title was creating a tech giant, step one. This was the title behind above that dashboard.
Amazing. And correct me if I'm wrong, but Monday started from being from Wix. No, it started. Was that Monday who started through Wix? So it was a small.
It was, yes. Again, like I haven't been at the company. I know the stories very well. Yeah, it started. Roy worked at Wix. It started as an internal initiative and then a startup within Wix, and it grew and
became this monster.
Yeah.
Amazing. So you left about a year ago, right? You moved to VC. You're in a beautiful venture firm that has a good reputation, has done good investments, has great companies in its portfolio, and also has, I think it's very important, it's very I don't like to use this term, but like founder friendly, meaning that founders do find value out of the VC. A lot of VCs, you're relatively new to the space, but you have worked in a giant unicorn. But lots of VCs have this reputation of claiming to be value-adding machines while just being the kind of like the no teacher on the board instead, right? But Greenfield, when people talk about Greenfield, they do say there is this value creation mechanism, and I feel like you've been quite a part of that, because since you joined, you're really working hands-on with some of these founders. So first of all, how did you feel about this transition? Why did you make that transition in the first place? And I think after you answer that, I would love to know what kind of is the mindset that you came with, because it does seem like you have kind of like a different approach to how VCs should operate after, like post-investment.
Yeah, so first, I think our approach in Greenfield is that, look, there's a lot of money in the world that potentially can be invested in startups. If you compare it to a few decades ago, it's just like uncomparable. So I think it should be smart money. Like you should add value to your companies. You should have some kind of a value proposition to make. And I think for us, it's on two aspects. The first one is I think we are especially founders friendly. Like we are there to support the founders that we invest in. We really invest a lot in people. This is a big criteria for us, and we're trying to be there for them. I think that founders are going through a tough enough journey, and I've seen different types of investors. We're trying to be alongside our founders. Obviously, we're there to criticize, to help, to outline mistakes and so on, but we're there for them to help them and be part of the journey. And also in our state specifically, we invest in rounds B and C. This is where the company is going through a dramatic transition from, a company that is more of around product market fit and vision and, landing your first clients into really scaling. That's where you get the big check and you're expected to deliver big numbers. And many companies either do not make that transition at all, or it takes them quite a while. and we try to really make it successful and shorter. And we try to deep dive into it. So this is our approach. Regarding my transition, not trivial. I think that if we would have discussed 2 years ago, I would probably say the chances that I would be out of Monday are minus 7%. I really love the company. I love sales. So it's, and I think that the company is just at the beginning. But when I've met the guys at Greenfield, I've saw a lot of parallel aspects to the time I've joined to Monday. So it's a small yet very promising organization that I would like to join early and be part of the building of something big. And we aim to be one of the leading funds within our category, which is early growth, again, rounds B and C, globally. And I think we can do it. So a big challenge, but I think we are up to it.
I talked to Edith from Pitango several weeks ago. We had a fascinating conversation, and she told me that, and she wrote this beautiful booklet or like magazine called the Startup Growth Manual or something like that. I'm probably mispronouncing how she called the book. I have it in my house. But she basically interviewed, like a lot of, she interviewed Gong, Tipalti, I think even Monday, I'm not sure, but she interviewed like the founders of so many of those gigantic unicorn brands. Lemonade as well was that on the list. And she basically talked about going from 10 million ARR to 100 million ARR. And you see, we see a lot of startups when they get to 10 million ARR, they're not able to make that scale. Sometimes the CEO is not a fit for the next stage. Sometimes they don't have the mechanisms in place, right? Maybe they had the mechanisms to go from 0 to 10 million, but not from 10 million to 100 million. When you talk to those founders and you kind of consolidate with those startups who want to get to that benchmark of 100 million ARR, what are some of the main issues that you see?
And by the way, the challenges are not ending at 100 million. And when the founders, especially like the promising companies, the ones that are looking for high valuations, when you look at their investor decks and to the projections, it go way beyond 100 million. So they need, and the day after the investment, they need to deliver.
Right.
They need to scale. And as I said, there's a big difference between lending contracts or ARR, call it manually, but like you can even do it at a good pace, at tens of millions in ARR, and then at some point, if you don't have the right mechanism, if you don't build the right engines to keep on running, you will then slow down. And this is what we're trying to prevent. I've seen very few startups, not only in Israel, globally, that are constantly working and spending a lot of resources into really building those foundations to build a long-lasting go-to-market machine.
When you talk about mechanisms, I keep on thinking about Revolut. You heard Revolut, the big fintech giant. Their founder Nick Storonsky also like published a great book that I really it's an ebook that I recommend. I think it's free. I really recommend people to read it. They can find it on Google. When you like sit and talk to those founders, right? And you're sitting on their board, or you're going to a meeting with them to basically strategize how to get to that next level. What kind of pushback are the founders usually getting? Are they basically like, what are some of the mistakes are they doing? Are they not thinking big enough in terms of like penetrating into new markets? Do they have is their playbooks not aggressive enough? They don't have enough sales expertise in terms of their C-level executives? What type of problems do you see there?
So the good answer is that at least when I speak with them, I don't hear a lot of pushbacks. So that's a good start to begin with. And then it divides into two groups. Some of them, the first group, don't really know what's coming up. So what scale look like and so on. And those that do know what's coming up and what they need to deliver, they don't know exactly. They don't really understand what are the different mechanisms that they need to start, establishing in order to be able to deliver it. And if you want, we can deep dive into it. But basically, these are around 7 groups or 7 areas that you need to start implementing the right processes in order to keep on running. And even like when you look at the role of the sales leader of a company that generates $10 million in new ARR or 100, these are the day-to-day of those leaders would be completely different. On a $10 million, you would have these sales superstars that can jump on deals that you currently struggle with, and they would go and jump on closing calls, and maybe they have the 10, 20, 30 sales reps that are following them from one place to another, which is super important. These are important skills for a sales leader. But then when your group is big enough, you need to start planning in advance. You need to go through data. You need to work on strategy. You need to change policies and so on, and not the same skill set. So either not everyone can adapt. Those who can still need to learn new skills, and it's a big transition also for the leaders, not only for the companies.
When I talk to founders, there's something interesting going on right now in the market. So at 2021, there was this bubble. Lots of money was crazy valuations. And you see a lot of startups do this think about like this WeWork model, where basically you burn lots of cash, but your ARR keeps growing. It's not necessarily sustainable, but you're able to play with those numbers. And then when money became much more expensive, those startups were not able they weren't able to hire without thinking about cash. They weren't able to basically spend money on advertising and marketing as they liked, as their plans were to do. And they kind of got to a place where you see this really nice SaaS products, SaaS tools that are like 7 million ARR, 10 million ARR, but they're not going to become a real VC kind of startup where they're able to get to like 100. And then when I talk to founders behind closed doors, a lot of these founders are telling me, listen, I think this is a great business, but I think I should find a way to kind of remove, kind of clean up the board a bit, remove VCs, maybe buy back their shares or whatever, and basically find a way to build this business as like just a privately held company. So first, my question for you here is, first, do you think that is like a healthy approach to basically realize, okay, we do have a good product, there is some sort of product market fit, and we have great customers that are happy with us, but I don't think this specific platform can scale to that amount, but I think it could be a beautiful business if it's going to be held privately and in this kind of context. And my second question, and maybe it's kind of like an answer to my first one, do you think there's a way out of it, like where companies can basically say, okay, maybe we kind of run this operation, with on the low kind of thing for a while, and then when money becomes cheap again, we raise again?
So a few thoughts on that. First, I don't think that every company, meant to be unicorn. That's why it's being called unicorn, and not every company would reach and become public. Some companies would exit, when they're smaller, and that's fine. That's part of the nature of the business. I think that if you took money, especially a lot of money, and you're considering to transition, it's going to be challenging road for you. But I mostly think that if your challenge is efficiency and the unit economics don't work, that especially being private is not going to work. So there's no way, because you're gonna burn you're gonna burn cash, and you're not gonna have funding, so you're only gonna shorten your runway. So I think there's no way to go around your becoming efficient and having a sustainable model and healthy unit economics, and that's the baseline to start with at any business, unless you WeWork or. But basically, once you achieve that, then there's a line between growth and being profitable or efficient, and you can tune with it. Like sometimes when money is more expensive, when the capital is more expensive, you probably want to slow down growth be maybe more modest on the growth, but burn fewer cash. Or your investors, there are cases where your investors said, "Hey, we're now it's a race for market share,
Mm-hmm.
where we will fund you. Your business is healthy, unit economics are there, grow more, and when you're growing, you're burning more cash. That's part of the equation. You're hiring people until they're ramping and so on. You're acquiring more clients. Sometimes until you see the cash coming back in. But the base of your business, if it doesn't make sense at the unit economic level, I don't think it will work either as a VC or especially not as a private company.
Interesting. So you mean, like, first of all, think about unit economics, make them work, because if you go private, you're just going to shorten the runway anyway, and then you're gonna. That's quite interesting. I find it another thing that I find fascinating is that Monday, for example, you're saying it's not a productivity tool, but when you look at this workspace kind of category and you see there's Monday and Trello and ClickUp, and before Monday there was Salesforce, because Monday can sometimes be acted as a CRM, and there
And Asana and Smartsheet and Airtable and
it's
like the list go on.
right. It's unbelievable the amount, and so like a lot of what I've seen that Monday has been doing recently is, and I've read a great piece. NFX, Gigi Levy and his team wrote a nice piece about vertical SaaS, vertical AI, or whatever, vertical AI integration SaaS, something of that sort, which is basically, you see Monday doing that in a sense. So Monday has, like, there's Monday for marketing, Monday for developers, right? There's a whole dashboard for developers, which is specifically designed for DevOps. And I just wonder, do you think this is where, like, this industry is going, like this workspace or SaaS or AI industry, like I'm talking in a whole, where startups are going to be aligning more to like a specific vertical than trying to have like a horizontal solution?
In general, I think Monday has a horizontal solution, maybe two horizontal. So if I did not have the strong marketing machine behind me, it would be even quite challenging to do outreach and outbound, because it's a platform that can do everything. Imagine you would try and sell Excel, and I would tell you, hey, I've got a product that can do anything. You can calculate anything on top of it, and you can resolve anything. Do you want to buy? And you would think, for what problem am I solving? But basically, if I had to maybe outline quickly 101 for startups, start narrow on like a certain, even if you have an horizontal platform, start narrow on your target audience, on your ICP, on certain industry that even like within Monday, when we wanted to sell, especially the larger contracts, we needed to understand the jargon and the day-to-day life of our clients. So if we were selling to financial services, we need to understand how banks would use Monday for and speak within their language and so on. Regarding, like, in general, the SaaS industry, I think we see more and more vertical solutions than horizontal solutions. It allows them to go deeper and resolve the problem, in a more specific way. I think AI is going to change everything in the industry, both horizontal and vertical SaaS. So a lot of changes are going to come towards us.
When I talked to my friend Ryan Breslow, who's the founder and CEO of Bolt and like several other startups, like he actually built 3 unicorns, and he's only like 31 years old. He's a very impressive dude. I asked him, like, dude, how do you organize things? Like, what's the mindset of scaling? And he told me that before you think about like scaling the company, you need to scale yourself as an individual. Like, you need to be able to know how to run your day, how to be productive throughout your own way, and to know how to basically like allocate time and your own time and resources to effectively kind of like, it's like the Pareto principle, like find the places where your impact got the most leverage. And you manage a team of like 200 people, right? In Monday, like it's insane. And you had to manage that team. It didn't start like that. Your team grew. You guys grew from 15 million ARR to 800. That's crazy. How did you, like, what was your internal infrastructure? Like, I'm really interested in the details. Like, how did you like manage your day? How did you manage your time? How did you know what's a priority, what's not a priority, what's something that would cause traction and what would cause distraction?
At the beginning, maybe at the first year and a half or two, I made a mistake
Mm-hmm.
and I took too much on me.
Hmm.
And when I think I matured a lot as a leader throughout my time in Monday, I had to. And I think once I realized that if I wouldn't teach and scale my leadership, it would all crash. That's where like that was a big turning point for me. So finding the right people that you can work with, that you can teach, make them independent, teach them, grow them, empower them. And I was fortunate to have really amazing directors and RVPs under me. And when it became the case, I was able to really lift my head and plan out and make things that would really move the needle. I barely if you look at my time allocation, I was around 10 to 20% within the current quarter, which is crazy for a sales leader, and probably 80% from next quarter and probably even towards next year on planning and so on. Because when you're managing a large organization, making significant changes take time. So I need to plan in advance. I need to run experiments to make sure that my assumptions work and then make the changes. But every small changes that succeeded made a big difference for my group. But the things that really enabled it were the infrastructure around me, strong HRBP as a partner, very strong sales leaders, a strong BizOps and RevOps that delivered the insights, the analysis, and so on. And that really allowed it to happen.
How do you manage your day? Are you more like a to-do list guy, or is everything on the calendar? Like, how does the productivity routine look like?
Yeah, I'm trying to be a to-do list guy, but it stays on the notebook, and then I've been drawn into meetings and so on. Yeah, so it's more for like I don't know, delivery and get me through WhatsApp. That's I don't read Slack. Emails are way slower, and if you need me at any time of the day to approve a deal or jump on anything, you WhatsApp me and I jump in.
And do you, when you look at like the pace in terms of how it was at Monday compared to how it is now in Greenfield, do you feel like the pace is different in terms of like the hustle intensity?
Well, everyone promised that I'm gonna, slow down, that life are gonna be easy, that I'm gonna visit the Claro or drink coffee in different coffee shops and meet people. But I don't know if it's us on Greenfield, but we're running fast. It's a pretty intense business. Is it as intense as managing 200 people on the context switching and everything? Probably not, because it was really rough at Monday. But we are working hard. We are running fast. I'm now engaged hands-on with the companies on their sales with around 14, 15 companies.
Wow.
I'm on interviewing, I don't know, somewhere around 50, 60 candidates a quarter. I'm on 4 or 5 focus meetings a week. So it's quite intense. But I think I may like it or not, but I think I'm addicted to it.
You're addicted to this work.
To the fast pace.
Love it. Yeah, I'm also like that. I have that to have things running very fast. Is there any book that kind of influenced you, or kind of like a mindset, or like a podcast or a movie, something that like really you think about almost every single day and kind of makes your mindset go?
So I have 2 books that I've read early when I started my transition into sales. The first one is The Challenger Sale. Second one is not a pure sales book, but Never Split the Difference. That teaches you about how to interact with people, how to motivate people and drive them for action. I think a good starting books for people it can be for founders, for people who want to do sales. I think these were the main 2 that really helped me, at least move and gain my first steps in sales.
Are you a family man? Do you have a family?
Yeah.
Yeah. How do you feel? like, do you feel like family is a great supporting tool for for like a career like you have?
Um, I think I get the energy from my family. I think there were two long periods where I couldn't, where I didn't make a clear cut on, I need to at some point stop and be with my family, especially, we're working a lot with US. Either
Right.
like I had my US partner in crime, VP sales of the US in Monday, and we had the CRO meetings and so on. And your US time is really overbooked.
Right.
You have only 4 or 5 hours, and this it can be like pretty common to have meetings up until 7 or 7:30. Driving from Tel Aviv to Petah Tikva takes another 40 minutes. So for too long time, I did not make the cut early on to see my family. And I learned, again, this is one of the things I've learned probably too late. But I've learned that you need to stop at some point. Maybe get back to it when the kids are asleep or something like that. But you need to have your family time and to make the cut between work and home.
I think that's very important. I think I'm a bit of a workaholic, so I'm really obsessed with the work. I think a lot of high performers are like that, where they're obsessed with the work, and the work fills them so much it becomes like a very big part of them. And I find it sometimes, not as easy to kind of just like not think about work and be present with my friends or with my family. But I definitely think it's a skill. It's like a muscle that needs to be improved. It sounds like you're doing it better nowadays than before, so I'm happy for you.
I'm not waking up at 5 times at night to refresh Salesforce, so it's a big improvement.
It's a big improvement. What's next? What's next for Greenfield?
So we're now finalizing the fundraising for Fund 3, which is going to be, I think, one of the bigger funds or biggest funds in Israel. We're really fortunate to have a backup of our LPs at non-trivial times. We've made 3 first investments in our first fund, really promising companies. So the pace is strong. We're expanding into the US. We're growing the New York office with the aspiration to become more and more global. So things are really, proceeding well for us. But it's always a matter of keep on pushing and helping our existing portfolio companies, and being on top of the next promising startups to make our next investments.
Love it. This is my last question for you. Which investor, like I'm talking like a specific person, do you kind of like not idolize, but kind of look up to in a way, And don't tell me someone in your own venture firm. I'm talking like someone else in the industry. Is there any VC that you look into and you're like, he's got something?
So you really caught me here a bit by surprise, because I'm fairly new to the world. I don't know too many investors.
Which is sometimes good, by the way.
You told me not to mention our partners, but I can tell you one thing about not naming specifically our partners, but some insight that I've got. So when I was an operator or on the other side, I don't think I had enough respect for bankers. Because you always have, or for investors in general, you always have those thoughts in mind. Hey, you didn't do it. You didn't walk that way. You don't know how it really is. You're mainly reading the numbers, but you don't really understand deeply. And I have to say, really, after 1 year working with our amazing partners, that I have so much respect for them. The level of understanding of the business is of the way they understand the business. For example, we have a partner who's was leading the investments in cyber. His background is investment banking. He knows cyber. He really knows cyber. Really understands cyber deeply. And that's just like one quick example. I don't want to get in trouble with the other partners. So I have so much respect for them right now. and I didn't have this understanding before. Another thing that I'm seeing is their ability to support founders, to make right business decisions, to be a supportive board, and these are non-trivial decisions and things like that. So as an operator, or someone who comes with an operating background, I now have much more respect to investors, way more than I had before.
Love it. Nir, thank you so much for being on the show. Really excited to see what's coming up next for you guys, and keep on the awesome work.
Thank you very much, and thank you for having me.
Yeah, of course.